we could tier the banks. Right. In fact, the structure we have now is tiering the banks because you have the universal banks, right? Then you have the savings and loans.
Okay.
Then you have rural banks,
Okay.
and then microfinance, and then credit companies. This is the structure.
Okay.
So our banking structure is tiered. There's nothing wrong with having within universal banks category 1, 2, and 3.
Okay.
They all don't have to have 400 million.
Okay.
Right. Because banking is such that your capitalization determines the loans that you give. So if your capitalization is 100 and somebody has 400, million, it means the person with 400 million capitalization can give 4 times more loans than you. And that's a regulation. That's the Bank of Ghana regulation. So we could tier the banks, right? Because coughing up some of these big sums of money, I've seen some of the insurance from 50 million to, so maybe we can later on use the right figure so that we know what to be factual, in these matters. So that's one solution. The other solution is a bad bank.
A sort of a reclassification.
Yeah, what you said, Toby, and that first one is you could make it a bit easier by saying within the top echelon you can have category 1, 2, and 3 banks. Some because they are above savings and loan.
Okay.
But they may not be up to 400.
Okay.
Because remember the first recapitalization which we started was to be 230 million, which was then increased to 400 million. So the tiering, those who argue for tiering the banks can say, okay, within 200 and 400 million, you can have category 1, minimum 200, category 2, 300, category 4, 400.
Okay.
And they can operate well. And it's far above the 15 or so million, which you need for savings and loan.
Okay.
And then you come to the savings and loan, so between them and, the 200 or now 400, 15 million to, it's huge. So they are big savings and loan. I don't have the figures. But we know Popular is born and others who presumably are doing, well. They can be in a higher tier.
Okay.
So that, and the Bank of Ghana did something quite similar.
Okay.
Remember the initial step taken against Group Indom, that is GN Bank, was to move them from
Universal
Bank to savings and loan.
Yeah.
And considering that it's 15 to 18 million, I wonder, how it couldn't have been sustained, given even some of the figures that we're talking about.
Okay.
Right. So I'm saying that is an example. First example. Second one is what I started already. You could create a bad bank. Because most of the problem starts with non-performing loans. Okay. There's a diversion of funds, which has to be dealt with. The U.S. dealt with it with a law called the Glass-Steagall, I hope I get the names right, law, which made it strict that banking is banking, and you can't use bank funds to go and do affiliate business.
Okay.
To protect depositors' funds.
Okay.
So we could strengthen the Banking Act, for example, to do that. You could also, instead of waiting every 5 years, because this is the second recapitalization, major recapitalization we are doing, I would say maybe even a third, if you consider that it was to be 230 and then to 400.
Yeah.
You may want to say, okay, in 5 years, we are now at 400. We envisage that given inflation and everything, your capitalization would have to be 600. So maybe in 5 years, you use some of their profits to put aside 50 million until you reach cumulatively. So these are some of alternative solutions, and I believe that in such matters of enormous, and that is a consideration for us because such decisions have significant implications, as we are saying, as we are seeing now. It has implications for workers who are likely to lose their job if you don't handle it well. It has implications for their immediate families, and in Africa and beyond. Maybe I'm looking after a nephew, not just my son, or my daughter, nephews and nieces, even strangers. We like to help. Extended family. Okay. You have depositors. Even if their funds are locked for 3 months, it may stop a business from running. It may be harassed from its creditors and others before it could access. Some may never recover because I don't know if we can get enough money to cover, all of it.
Okay.
Confidence in the banking system, which is what borders on security that the president was talking about. It means that people mistrust the bank. And so it creates more problems for the banks because the first thing they do, they come and withdraw their money. Because banks have been closed, so they come in. And if it gets so bad, that's what you call a run on the bank.
Okay.
So you have a lot of, and it happened. These things happen even in advanced countries. In fact, the depression of the 1930s was one of the key reasons in the U.S. was a run on banks, particularly in the New York area. So then the banks, you see, so when I come and take my deposit, right, and I can't recover loans quickly, then the banks operate on taking a deposit and using multiples of it to give loans. So when they come and take, let's say, the 10 million, which I used to give 15 million, some will say even 10%, 100 million loan. It means that when somebody comes to take it, all those with whom I give the loan and the ramifications. So when you take all this effect, economic activity, because they're the ones that oil the economy, whether it's a roadside, vendor, microfinance who comes to take the money, or a big guy, when you have confidence in the shaking, then the banking system begins to suffer. And sometimes it takes a while,